The $6,000 bonus deduction in the Big Beautiful Bill will result in no Social Security taxes for around 88%. But if you're over 65, and you'll still pay taxes on your income from Social Security, like I will, you are still getting some much needed tax relief. The increased standard deductions and the $6,000 bonus will really help. I'm Beverly Harzog, and I'll show you how it's possible to deduct up to $46,700. Let's take a look at the new standard deductions if you're 65 and over. These are permanent or until changed by a future bill. For married, filing jointly, $31,500 is the new standard deduction. That's up a little bit. And the 65 plus deduction is $3,200. It's $1,600 piece. That gives you a total of $34,700 before the $6,000 bonus. If you're a single filer, your standard deduction, $15,750, and you get $2,000 for being 65 and older. Let's see what happens when we add the $6,000 bonus. So you deduct $34,700 from the AGI, or the modified adjusted gross income, if that's you. And with a $6,000 bonus, if you both qualify, you get another $12,000 deduction. So in effect, you get $46,700. And if you're a single filer, it's still pretty good. You get the $6,000 bonus, and you have in effect $23,750 that you can deduct. But there is a big difference between how the standard deduction is used on the tax form and how the $6,000 bonus will work. I've seen headlines suggesting that if your income exceeds the limits, you get nothing. I actually read the Big Beautiful Bill. You're welcome. The Bonus Tax Relief for America's Seniors Act covers the bonus, and I will share what I've learned. Let's start with whether or not you qualify. To qualify for the $6,000 bonus deduction, you have to turn 65 by the end of the year. So 65 now or 65 by December 31st. Your modified adjusted gross income doesn't exceed these limits. Married filing jointly, $150,000 limit. Single filer, $75,000. If you make more than that, you still get something. Excess income over the limit is phased out at 6%. For example, let's say you're single and your income is $100,000. If we phase that out at 6%, we take the excess, which is $25,000 over the $75,000 limit, and multiply that by 0.06, 6%. And we get $1,500. As you can see, it's $6,000 minus $1,500, but you still get $4,500. I think that's pretty good. The deduction phases out completely for single filers at $175,000, and for married couples filing jointly at $250,000. The $6,000 bonus is available whether you use the standard deductions or you itemize. And I think that's awesome. That is for 2025 to 2028 only. So it is temporary. And that's why it's so important you understand all the details so you can take advantage of it. Let's take a look at how you can save on taxes. This example is a 65 plus couple married filing jointly. The MAGI or AGI, let's say it's $70,000 and their Social Security income is $60,000 for a total income of $130,000. Your adjusted gross income, AGI per the IRS, is your total gross income from all sources minus certain adjustments. Modified adjusted gross income is your adjusted gross income with certain deductions added back, for example, foreign earned income. Now, how much of that Social Security income is going to be taxed, that $60,000? If you make over $44,000 currently, you are taxed up to 85%. I know, that is terrible, but that's another episode. And I'm working on that, actually. Let's take $60,000, multiply by 85%, and that's $51,000. So that's how much is taxable. We deduct $51,000 from $60,000, and that's where I got Social Security not taxable, $9,000. Let's subtract the standard deduction, that's $34,700. Now look at the taxable income. It comes out to $86,300. Let's take a look at the bonus deduction. We'll assume that both people qualify for the $6,000 bonus, so a married couple gets $12,000. Taxable income is now $74,300, and that's because we get to deduct $12,000 from taxable income. So that is a direct savings and tax relief right there. So taxes due, 74,300 is a 12% rate. You would owe $8,916 on taxes. Now, just for fun, I decided to do a little calculation on what taxes would be due on this exact situation if the big, beautiful bill had not been passed. Your taxable income would have been $87,800. You would have to pay 12% tax on that. That comes out to $10,536 in taxes you would owe. And that saves you $1,620. So there is savings. I wanted to give you a general idea of what is possible and how much you really can't save. What smart money moves should you make in the next 4 years since the $6,000 bonus is temporary? Let's take a look at that. First, I want you to talk to your tax professional to ensure that you maximize every deduction that you have coming. You deserve it. Your new savings should be used in a way that benefits you the most. If you can barely pay your bills, use this money to start an emergency fund or to pay down high interest debt. If you're doing okay financially, talk to your financial advisor about the best way to manage your money and your investments during the next 4 years. It might be a good time to convert some traditional IRAs to Roth IRAs or coordinate withdrawals for your pre-tax IRAs. If you have any questions or thoughts or comments about this, please leave me a comment. Thanks for being here, and I'll see you next time.